Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing what are the best places in the U.S. to invest during 2021. And this is a question I get all the time. Where's the best place to invest, Charles? Where should I be looking? Where are the trends heading to? And best can be a subjective term. After all, are we talking about the availability of housing stock, the lowest overall prices, highest rental rates? We're going to be weighing several factors into determining the best places in the U.S. to invest in real estate this year. So some factors to consider. Single-family rental homes have a higher cap rate than typical apartment complexes. 6 to 8% is average, which is ideal and which is definitely higher than most apartment complexes today. High rental occupancy rates. The national rental vacancy rate as of Q1 2021 stands at 6.4%, with this being slightly lower in the suburbs, 5.5%, and several states also being below the median. Low tenant default rate. During normal times, the national rental default rate is below 10%. That being said, 2020 has changed a lot of things. Primary among these is the percentage of U.S. households now renting their homes, which stands at 32%. This tests the most recent high of 1986 to 1988, which was 36.2%. Next is property prices and the trend. Given historically low 30-year fixed mortgage rates and fiscal stimulus, property prices are going up everywhere. But there are still some pockets where they are both still relatively low and growing faster than average. These are the places we want to look for. Next, favorable population demographics. More people moving into a state than leaving, low cost of doing business in that state, and then job and overall population growth, which are all contributing factors which will increase your return on invested capital. My last thing that I like looking here is called landlord friendliness, so it's another thing we'll add in when we're looking at a state. Best place in the U.S. to invest, getting right into it. So number one, Birmingham, Alabama. Low medium home value, $148,000. Average rent is up 3% compared to the previous year. Those numbers and stats from Rent Cafe. Birmingham, Alabama is a leading banking center and headquarters to a large number of construction and engineering companies. There was a 12.3% vacancy rate, which is higher than the national average. But in the future, this is going to be an area that is just starting to take off. Next, Orlando, Florida. Now, Orlando was something that a lot of investors veered away from during COVID because of the amount of their economy dependent on entertainment and hospitality. $236,000 medium home value, medium home rental per month of $1,599, ranked number 2 among America's fastest growing cities from Forbes, 7% vacancy rate in line with national average. Next, Atlanta, Georgia, $190,000 medium home value, medium rental per month, $1,500, 3 years single family home price appreciation forecast of 9.3%. Population growing by more than 1% year over year, 2019 to 2020. Well, apparently it's going to take a lot more than COVID to slow down the growth in Atlanta because Atlanta and Georgia did not see any decrease in rents or in population growth during 2020 or 2021 so far, or 2019. Idaho, Boise, $233,000 medium home value, population job growth, triple the national average, and that median home price is thanks to everybody from California moving to Idaho. Median rental per month is $1,271, which is much lower than you would expect for a median home value of $233,000, showing that rents will most likely be increasing here in the near future. I don't know to what, but that's something where as more people move in, it's going to definitely drive up the rental prices and not just the medium home prices. Next, number 5, Dallas, Texas. Dallas has been on our radar for years, and $186,000 medium home value, medium rental per month of $1,800, 3-year appreciation forecast of 11.4%. So these are some objectively top markets to buy real estate across the nation today. Tellingly, the Midwest, Mid-South, and the Southeast come out on top, which is exactly where we invest. But some other notable markets which ranked high according to metrics we previously mentioned are Nevada, Colorado, Arkansas, Arizona, and Illinois. Illinois definitely being a tenant-friendly state, rounding out our top 10. In closing, please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. Look forward to 2 more episodes next week. See you then.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars Incorporated exclusively.